Happy Thursday, folks. Anthony Special here with Special Analysis. Hope you're having a wonderful week so far. Today, this is for my futures traders. For those of you who like the futures market like I do, you love that leveraged position. You want to get in that market. You want to really cash out and you want to move on with your life. This was the perfect opportunity to do it. It has transpired, and it transpired very, very quickly. So I want to break it down. I shared this idea with you before the trade was taken. It was able to be actioned. Action had been able to be put upon it if you had so chosen to. It was available on my TradingView account. It was also shared through email. It was shared through social media. It was written about in my newsletters and blogs. I mean, it's very apparent that I'm trying to put out this very real, very actionable information so you guys can see the process as it starts from start to finish. So I want to take a look at the chart today. This was the trade on the Nasdaq that we had offered last week. It had gone out Sunday evening. It was posted to my TradingView account, so it was there before the trade transpired. The idea was to sell the market as it opened Sunday evening and place a target at 11,175, which it did in fact hit on Thursday. So this was a 4-day time frame for this to transpire. Technically probably a little longer, but Monday, Tuesday, Wednesday during Thursday's session, it was in fact closed, realizing they are 24-hour sessions since this did start on Sunday evening. But here nor there, let's look at the chart. Let's talk about it. I want to also discuss the fact that we moved our stop to break even on Tuesday, and we could have potentially been stopped out on Wednesday, but we were not. So I want to dive into that a little bit just so you can see my thought process as this trade transpired. So I'm going to open up the chart here to the full screen so we can see it. Here was our confirmed trend favoring breakout. You can see we are in a downtrend represented by these teal channel structures here. So this was our break with confirmation. This was our entry at 11,865 to go short. A stop, meaning this trade essentially went bad or all wrong at 12,785. That was time to get out and walk away with a target at 11,175. So the market did not open where it closed. It did what we call a gapped, and that does happen from time to time. When there is a lot of pressure, a lot of orders built up, the market will gap. It's not unheard of. It's not abnormal. It is what it is. But we are, in fact, in what we consider an identifiable trend. You can see here's an impulse, an impulse, correction, impulse, correction, and we're impulsing. This portion here was a little bit of consolidation as we were making a top. Outside of that, the market is moving down, like it or not. But that doesn't mean there's no opportunities. The opportunities are here, and they are plentiful. In fact, if you had shorted the market upon the open and bought it back on Thursday at the indicated area that we were suggesting the target at, it was 2,547 ticks in total, which if I do the calculation for you, 2,547 times it's $5 per tick, could have offered you in 4 days $12,735 US with just one E-mini futures contract. So that's pretty exciting. Not too many people can say, "Hey, I woke up, on Friday morning and my paycheck was $12,735 inside of just 1 week." So those are the types of opportunities that we have here within this market. People that are scared or afraid because the market's going down. I don't think that that's an accurate statement. I think that that's just inexperience. I think that's being scared. I think that's letting fear control you. Price action on a technical basis worked very nicely. You could see I have a primary trend line, which is this thick teal line, and then I have a secondary support structure, the thin teal line, which you could see inside, and price had literally just by a hair missed touching it. So our calculation of where we expected to find some form of support was in fact accurate. Like I said, there's maybe a hair that you could see white in between that channel line, that inner line, and where the candle was placed. You can look back at any of the charts. You can see that none of this has been adjusted. This is just what it was as prior to the trade actually transpiring. But it worked out nicely. And again, it happened fairly quick. So just a recap here on the price action itself. So Monday, Tuesday, this sold off, came within 1% of our target. So I had moved my stop to break even. You could see that. Basically just dragged it down to where I would have thought break even, was where I would have exited. So now I had very, very little risk. I was just risking the difference of that gap, which was minuscule, just a handful of ticks there. So I just left it alone. And then Wednesday, what happened was this price bar actually creeped its way almost all the way back up to where the week had started. And it had done that based on that 75-point basis rate hike. Well, Thursday came, and that rate hike was clearly just a one-day affair. The overall weakness in the economy is outweighing the 75-point rate hike. And I don't believe we've seen one of them since the 70s or 80s. But even still, that's not a trend-changing event. That is a intraday event. And that is exactly what it turned out to be, because Thursday and Friday, market continued to sell off. And you could see that it did quickly fill our target here. So, guys, with that, I want to recap on this. I know we have a whole bunch of futures traders that follow me. I personally am a futures trader. I love the futures market. It gives you that leveraged opportunity to get in, make a whole bunch of money. It happens fast, like this, $12,000+ in just literally in a matter of 4 days. You can't ask for much more than that in life without being uber greedy, and I don't condone that. Most people don't condone that. I'm sure there's others out there that for entertainment purposes will tell you what you want to hear. But for me, it's about making money in a bull market. It's about making money in a bear market and never being a pig, because I have no desire to be slaughtered. My desire is to live to trade another day. And if I do this carefully enough, that in fact can be done. So with that, as always, I appreciate you. Thank you for being here. I hope you learned something today. That's the most important part. And if you enjoyed this, even in the slightest bit, if you could do me a simple favor so others can enjoy this as well and learn from it, and that is below this video, like, share, and subscribe. It would be greatly, greatly appreciated. So with that, as always, have a blessed day, and I look forward to seeing you tomorrow.